In this video, we'll show you 2 stocks every millionaire portfolio has in 2026 and why serious long-term investors quietly continue to build positions in them. By the end of this video, you will understand how these businesses generate durable wealth, why they dominate their industries, and how they are structured to compound value for years rather than months. These are companies operating at massive scale inside global markets that continue to grow even when economic conditions fluctuate. They control powerful ecosystems, benefit from structural tailwinds, and possess competitive advantages that strengthen over time. These are businesses designed to compound capital patiently and consistently. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Let's start with the first company, and this one has quietly become one of the most important digital platforms in the world. Mercado Libre, ticker symbol MELI. Mercado Libre is the dominant e-commerce and fintech platform across Latin America, operating a deeply integrated ecosystem that touches commerce, payments, logistics, and digital finance. To understand why this business matters, you have to understand the opportunity it serves. Latin America is one of the largest and most underpenetrated e-commerce markets globally. Hundreds of millions of consumers are moving from cash-based informal economies toward digital commerce and financial services. Mercado Libre sits at the center of that transition. Unlike companies that operate only one layer of the value chain, Mercado Libre controls multiple critical components. It runs the marketplace where buyers and sellers transact, it operates the logistics network that ensures delivery, and it provides the payment infrastructure that enables trust and liquidity. This integration creates a powerful flywheel. More merchants attract more buyers attract more merchants, higher volume improves logistics efficiency, better logistics improve customer experience. Payments become more embedded with each transaction. Over time, this ecosystem becomes increasingly difficult to displace. The logistics network is particularly important. In regions where infrastructure can be inconsistent, reliable delivery becomes a major competitive advantage. Mercado Libre has invested heavily in fulfillment centers, last-mile delivery, and inventory management to ensure speed and reliability. Payments are another cornerstone. Mercado Libre's fintech arm has grown rapidly as consumers adopt digital wallets, online payments, and financial services. This expands monetization beyond commerce while strengthening customer engagement. What makes this business especially attractive to millionaire investors is its long runway. E-commerce penetration in Latin America remains far below developed markets. Digital payments adoption is still early. Small businesses continue to migrate online. Each of these trends compounds on the others. Financially, Mercado Libre has demonstrated an ability to reinvest aggressively while improving profitability over time. Revenue growth has been strong, but more importantly, operating leverage has begun to emerge as scale increases. Margins improve as logistics density increases. Payments scale with minimal incremental cost. Marketing efficiency improves as brand recognition strengthens. These dynamics allow growth to translate into long-term cash generation. Another key advantage is local expertise. Mercado Libre has spent decades navigating regional regulations, consumer behavior, and operational challenges. This institutional knowledge is extremely difficult for outsiders to replicate. Millionaire portfolios often prioritize businesses with both growth and resilience. Mercado Libre has shown it can adapt across economic cycles, currency volatility, and regulatory changes while continuing to expand its ecosystem. The company also benefits from optionality. As its financial services platform matures, it can expand into lending, credit products, and additional merchant tools. These extensions deepen relationships and increase lifetime value per user. From a strategic perspective, Mercado Libre is not just an e-commerce company, it is a digital infrastructure platform for an entire region. That distinction matters when assessing long-term relevance. Institutional investors recognize that businesses controlling both demand and distribution tend to generate outsized returns over long periods. Mercado Libre fits that profile. This is why it consistently appears in the portfolios of sophisticated investors focused on long-term wealth creation. It is not about short-term volatility. It is about owning a platform that grows alongside an emerging digital economy. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move to the second stock, and this one sits at the center of how modern commerce is built, scaled, and owned. Shopify, ticker symbol SHOP. Shopify is the backbone of independent e-commerce worldwide. It enables millions of businesses to create, manage, and scale online stores without surrendering control of their brand, customer data, or economics. To understand why this business belongs in millionaire portfolios, you have to understand what Shopify actually represents. Commerce has fundamentally shifted. Entrepreneurs, creators, and established brands increasingly want direct relationships with customers. They want ownership rather than dependency. Shopify exists to serve that exact need by providing the infrastructure that powers direct-to-consumer commerce at global scale. Unlike traditional retailers, Shopify does not compete with its customers. It does not try to own demand. Instead, it monetizes the tools, services, and infrastructure that allow merchants to grow. This alignment creates a powerful trust-based relationship that compounds over time. Shopify's platform touches nearly every part of the commerce stack. It handles storefront creation, checkout, payments, inventory management, analytics, and fulfillment integrations. As merchants grow more sophisticated, Shopify grows with them, capturing more value per customer. The moat here is ecosystem depth. Once a business is built on Shopify, switching becomes costly. Themes, apps, workflows, and integrations become deeply embedded. Over time, Shopify becomes the operating system for commerce rather than just a tool. One of the most important shifts in Shopify's evolution has been its focus on profitability and operational discipline. After a period of aggressive investment, the company streamlined operations and refocused on high-return initiatives. This improved margins while preserving growth. Shopify's revenue model benefits from both subscription income and merchant-driven transaction revenue. As merchant sales grow, Shopify captures a percentage through payments and value-added services. This creates natural operating leverage. The global nature of the platform is another advantage. Shopify serves merchants across geographies, industries, and sizes. This diversification reduces reliance on any single market and enhances resilience across cycles. Innovation remains central. Shopify continues to roll out tools that simplify selling across channels, improve checkout conversion, and enhance logistics coordination. These improvements directly impact merchant success, which feeds back into Shopify's growth. What attracts long-term capital is predictability. Commerce will continue to move online. Independent brands will continue to seek autonomy. Shopify sits directly at that intersection. From a financial perspective, Shopify maintains a strong balance sheet and significant cash resources. This provides flexibility to invest in product development and ecosystem expansion without financial strain. Millionaire investors often favor businesses that scale without linear cost increases. Shopify exemplifies this. Software-driven infrastructure allows revenue to grow faster than expenses over time. Another underappreciated strength is data. Shopify sees trends across millions of merchants. This insight informs product development and enhances platform intelligence, creating a feedback loop competitors struggle to match. As e-commerce matures, the winners will not necessarily be those with the loudest marketing but those with the strongest infrastructure. Shopify has positioned itself as the default choice for serious merchants. The long-term thesis is simple. As more commerce moves online and as merchants demand control and flexibility, Shopify's relevance increases. That relevance translates into sustained revenue and cash flow growth. Now that we have broken down both businesses individually, it is important to compare them through the lens of long-term wealth creation. Mercado Libre dominates a region by owning commerce, payments, and logistics within an emerging digital economy. Shopify dominates globally by enabling entrepreneurs to own their commerce stack without intermediaries. Both benefit from secular tailwinds that extend well beyond short-term cycles. Both reinvest intelligently. Both strengthen their moats as they scale. This is exactly the type of profile that appears repeatedly in millionaire portfolios. Businesses that matter, platforms that endure, companies that compound quietly while attention shifts elsewhere. Now let's tie everything together and explain why these two businesses consistently show up in millionaire portfolios heading into 2026. When investors reach a certain level of wealth, their priorities shift. The goal is no longer chasing the next hot trade or reacting to short-term market noise. The focus becomes durability, relevance, and compounding. Millionaire portfolios are built around businesses that continue to matter regardless of headlines. Mercado Libre and Shopify fit that framework exceptionally well. Mercado Libre benefits from regional dominance in markets that are still early in their digital transformation. E-commerce penetration remains low compared to developed economies. Digital payments adoption continues to accelerate. Logistics infrastructure continues to improve. Each of these trends reinforces the others. What makes Mercado Libre especially powerful is that it does not rely on a single revenue stream. Commerce drives payments. Payments drive financial services. Logistics improves conversion and retention. This interconnected ecosystem compounds value internally rather than relying on external growth levers. Over time, this creates resilience. When one segment slows, another often accelerates. That balance is attractive to long-term capital that values stability alongside growth. Shopify, on the other hand, represents a different but equally compelling form of dominance. It does not own demand, it owns the infrastructure that demand flows through. As long as businesses want to sell directly to customers online, Shopify remains relevant. This positioning gives Shopify flexibility. It does not need to predict which brands will win. It benefits from the success of all of them. Every new entrepreneur, every growing merchant, every expanding brand adds incremental value to the platform. Shopify's shift toward operational discipline has also changed how investors view the business. The focus is no longer growth at any cost. It is sustainable growth with improving margins and strong cash generation. That evolution aligns well with long-term wealth strategies. When you combine these two stocks in a portfolio, you gain exposure to both emerging market digital expansion and global e-commerce infrastructure. One captures growth from regional adoption, the other captures growth from global entrepreneurship. Both companies invest heavily in their platforms. Both prioritize long-term ecosystem health over short-term profits. Both benefit from network effects that strengthen as they scale. Another reason millionaire investors favor these businesses is adaptability. Markets change, consumer behavior evolves, technology advances. Companies that control platforms rather than single products can adjust without losing relevance. Mercado Libre and Shopify both operate at that platform level. Neither business depends on fleeting trends. They are built around structural shifts that unfold over decades. Digital commerce, digital payments, direct-to-consumer relationships. These are not reversing. Risk management also matters. Both companies maintain strong balance sheets and avoid excessive leverage. This gives them flexibility during downturns and optionality during expansions. They can invest when competitors retreat. Over long periods, this combination of growth, resilience, and discipline tends to outperform. That is why sophisticated investors often hold these stocks through volatility rather than trading around them. Now imagine looking back 10 years from now. E-commerce penetration will be higher, digital payments will be more embedded, independent brands will be more common. The infrastructure supporting all of that will matter even more than it does today. That is the lens millionaire investors use. They ask whether a business will be more relevant in the future than it is today. Both of these companies pass that test. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Between Mercado Libre and Shopify, which business do you believe has the stronger long-term competitive advantage, and which one would you feel most confident holding for the next decade? Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.